So this is Andrew from DeFiancy, and I just wanted to make a little video to talk about some of the trends that are going to be happening in 2023, kind of where DeFiancy, like what our mentality is, like our strategy going forward into 2023. But before we get there, I'd like to talk a little bit about how we got here in terms of the overall crypto market, some of the things that happened in 2022, and I think it's important to kind of go over a few things there because some of the things going on in 2023 will make a lot more sense. So we're looking at the Bitcoin chart here, and 2022, I mean, it was just pure destruction in terms of the crypto markets if you were watching. So we started off, around here, right? And it was pretty much just a downtrend, right? And then you got about, roughly about 20K in the summer of 2022, and things kind of started to go sideways here, right? A lot of people don't understand why that happened, and I'm going to kind of go into that a little bit here. But first, or really what I would like to point out before we kind of explain some of the dynamics there is this part of the chart, the run-up. So you actually need to look at this in a different way because it's such a ridiculous chart in terms of growth. You have to put it on a different scale. But as you can see, back in 2020, we just pretty much started, this up-only motion, right? And this started after what's called the Bitcoin halving. If you don't know what a Bitcoin halving is, a Bitcoin halving is when they reduce the amount of tokens or Bitcoin that is rewarded to miners. The reason why that's important is more than one reason, but the main reason in my mind is you have less tokens that are being released in circulation that can be sold. So it really kind of creates a temporary, or I guess a permanent supply shock. So we had the halving of 2020, somewhere in here. It was towards the end of 2020. And the market just went up only after that. But there's a reason why this market got so explosive. That was a big factor. That kind of kicked it off, the halving. But another factor is what is called the M2 money supply. So when we had the COVID lockdowns, we had obviously a lot of economic problems that happened. And it seemed like, it basically was appearing to a lot of economists that, there's no way that the economies around the world are going to be able to function without stimulus, right? So we printed a bunch of money, to put it simply. Well, whenever we did that, we had an enormous amount of liquidity that was injected into risk assets. And crypto being at the end of the risk asset spectrum, the tail end, received a lot of it, and there wasn't a whole lot of capital into crypto. So the result really is this enormous move. So you can actually see this chart here. This is Bitcoin versus M2 money supply. So as they increased the money supply, you have an enormous increase in market cap. So this is actually market cap here. And the reason why I'm mentioning this is to understand what happened here on the downside. It's the reverse of this. So you had a big narrative, with the halving and just a crypto adoption, Michael Saylor, yada, 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 right? Big move up, but there was a lot of liquidity being injected into the market. Once we got to November of 2021, right up here at the top, that is when Jerome Powell of the Federal Reserve, decided that they were going to cut back interest rates. Okay? I'm sorry, increase interest rates and cut back on quantitative easing. So the reason why I'm mentioning that is you can't really understand any of these markets without that context, that the market crypto markets and tech stocks and things like that, they do not like the idea that there's going to be less liquidity. Because at the end of the day, hedge funds, trading firms, they want to know that there's going to be additional capital that can come in behind them so that their investment makes money. Okay, so basically what happened was you had a lot of people that just sold for a year and they shorted the market, And that's how we got here. Okay. Now, there's also a lot of other things to mention that happened during this phase with FTX manipulating the market in many ways. This whole second rally right here, you could pretty much say was manipulation. I'm not really sure that was actually organic. That seemed to be primarily Alameda, which is FTX's trading firm. They're not here anymore. But there's a lot of speculation that they were really just pumping this market up, kind of a pump and dump thing. All right. So there's a lot of things that actually happened here, all right, to get to where we are. But let's talk a little bit about where we are right now. Okay. And the chart, the reason why I have this chart here is the chart, the more I learn about really the markets and how, macro, affects the charts, what you realize is the charts seem to really give you the most clear, objective perspective on what's happening, because the macro is going to be priced into the chart, and oftentimes some of the things happening on the chart it's really insider information, and I don't mean that in a conspiracy way, but you'll start to see the chart change before the narratives emerge in the general public, and you're like, how did the chart know? Well, someone knew there was something that was going to happen. And I like to think that maybe this move that we're seeing right here, and we're going to go into this, is part of that. But what I want to really, mention here to people is when you have an extreme drawdown like this, you're like guaranteed to have some kind of reversion. So it's 75% drawdown from the top on Bitcoin, 95% on most of these altcoins. Anytime you have that kind of event, eventually you are going to get some kind of reversion, because it's just easy to take out derivatives contracts, and we're not going to get too much into this, but basically if you short the market, you're kind of a target once things start to settle, and it should have been clear to people that we weren't going to go lower. What I'm trying to get at here is we've had an extreme sell-off. You have a lot of ammunition higher in terms of these derivatives contracts. And coming into the new year, the reason why we really are having this move up is you have hedge funds that were on the side, that have been on the sidelines for 2022. They basically decided that it was in their best interest not to be in the market. Yes, they may have had some kind of short position or something like that, but that's not really their main focus. They probably weren't making all that much. Shorting is an art, and it's very complicated in terms of managing it. So the reason I'm mentioning that is they come into 2023 with a 0.0% performance for the year, and they have a bunch of cash on the sideline. This is also the case in equities markets. So if you look at the ES, which is a contract for the S&P 500, it is the same story. Notice how you have a big drawdown, and now the market is basically like this beach ball underwater. It just doesn't want to go down because you have so many people on the sidelines with cash. There's really not a whole lot of sellers that want to sell, and naturally you're going to get these rallies. Now the question many people are asking is this going to be a sustainable rally? And we'll get into that here in a second. But what I want to mention here is, before we get into kind of expectations for 2023, is I don't believe that you're going to get much lower in the crypto market. Now, some of these altcoins, yes, they're going to go to practically zero in my mind. I don't know how long it takes. You'd be really surprised how long it takes for a lot of these altcoins to go down, because each project has like a religious component to it. There's the people who are left with the assets, they're not selling. So it really is kind of interesting in that respect. It's not like stocks where, I don't know if people really love their stocks as much as people love their crypto. It's an ideological framework people operate in this space. So I think the bottom is pretty much in, okay, on Bitcoin, on Ethereum. It doesn't mean that it's totally in. When I say pretty much in, what I'm saying is this bottom here at about 15K, 15 and a half, you're not going to get a lot of bang for your buck if you're expecting it to go a whole lot lower. is what I'm saying. Because what brought you down to this level was an enormous amount of market pressure from two crypto contagions. Probably should have went into that before we go into 2023. So let me just mention that briefly. The first market contagion we had was in the summer, around June or July. Okay, this event here. This was from the Luna collapse, primarily basically a Ponzi scheme, a crypto project that crashed, that really caused a bunch of other hedge funds and trading firms to get underwater, and they had to sell their assets. So it was just this domino effect, and that got us down to here. That was one of the worst crypto contagions, or maybe the worst ever, up to that point. And then you got to this area here where basically the market started to go into this accumulation phase, basically where equities had already gone through this too. And it wanted to break up. This market would have broken up probably closer to 25K or 30K. But you had another crypto contagion, the FTX collapse. Okay, when that news broke, boom, it's just total market sell-off. Absolutely, this was definitely the worst event I've ever seen. And then you went back into this accumulation phase, and now we're getting that breakout that you probably would have gotten here if that FTX situation didn't happen, because the FTX situation actually coincided with the expectation or rumors that the Fed would be a little bit more dovish in their monetary policy. Now that may or may not be the case, but regardless, the market, the equity legacy markets were responding positively to this narrative. Crypto would have broken out. We didn't. And I think really what people are seeing is this is extreme discount area. Now, to be fair, I didn't know if this was going to hold or not. I thought maybe it would, maybe it wouldn't. I could see it breaking down lower here to 13K, 14K, but this was like my absolute bottom, somewhere in here. And you can see this on a technical level if I zoom out. But just take my word for it, this was a very important level, and I didn't think it would break. And that's not really that big of a drop from where we were. So I was like, a lot of people are just going to start scaling in this area anyway, and that's exactly what happened. Now, we had this enormous move up, relatively speaking, over the last few days. Caught everybody off guard. Nobody was really ready for this. It's one of these things where once it started to go up, it never gave you a time to really get back in. So this is like over the last week. I want people to be cautious and not just think that things are necessarily over in terms of the bearish, the bear market and bearish conditions. I actually expected something like this to happen in March or even closer to the midsummer, because I think that's when the Federal Reserve is going to be forced to start getting back into this, what they call accommodative monetary policy, with reducing interest rates. We can go into that maybe in another video. But people didn't wait. And people saw this as an awesome opportunity, and they knew, or a lot of people are expecting the equities markets to keep rallying. So basically, crypto is front running a risk asset, risk on rally. Okay, and that's where we are right now. Now, this is how I'm looking at this right now. We're not FOMOing in right here. What we're going to do is be patient, and we're going to try to get back in if this thing, decides to come back down. And then this is where we would like to set longer-term DeFiancy positions for upside. Okay. Now we'll trade it in a very low-risk way, low risk, low reward, but we want to be very careful over the next few months, because the reality is once this market does get back into a secure uptrend, you're not going to out-trade that market. It'll move so much faster. I mean, just look at the amount of potential if it comes back to our target, to what to my target I think it would go to, which would be about 30K. That's like 55%. So what I'm really trying to get at here is don't lose capital before the eating is, or before the going gets good, or before conditions are easy. right? I'm trying to think of an analogy there. Sorry. When things get easy, that is when you want to take a lot more risk, and that is when you want to be, more aggressive. But we don't want to do that until it's obvious, because there's a lot of money to be made in this market if you don't make stupid decisions. I mean, it's really that simple. So we're very bullish going forward, but we're going to be patient, and and we want people to be patient with us, that are part of DeFiancy. We want people to realize we really just want to be around a long time. we don't want to take the wrong shots and ruin our chances of making a lot more money later. So we're going to be very careful, but we are very optimistic going into 2023. And we think by 2024, we're going to be in a completely different position in terms of how we do things and being able to take more risk. So looking forward to 2023, I do believe that it's possible we could get a rally back up to this 30K level. This is assuming equities does well. And then, I think we'd have basically this uptrend, and it'd probably look something like that. Now, it's also possible that we could get stopped here at 25K. So between 25 to 30K is when, we'll start to look to take profit. But we think that is a reasonable chance. Now, again, this is assuming that the equities markets, risk assets in general, are still catching a bid, or liquidity still coming in, and that the recession fears and things like that don't cause another negative bear market narrative, right? Because there are some structural issues within the economy that may start to become a problem, specifically with earnings and stuff like that in the equities markets, that could kind of cause the crypto market to be slow. We'll see, but I don't think we have to worry about that now, but that could come later on. And the reason I say that is a lot of hedge funds, a lot of investment banks, they're projecting a recession, they're projecting lower earnings, and that the Federal Reserve is going to have to change their monetary policy because of that. So the question is, will the market kind of price that in? Will it say, look, I want to get into these stocks and crypto and stuff because I know that monetary policy change is coming? It's all conjecture and speculation. But I think we'll be able to have a pretty good eye on these different possibilities, and we're going to act accordingly. So that's kind of our outlook in terms of price action, 25K, 30K, maybe higher. I mean, if there was real adoption and equities markets were looking really good, and some of the economic woes that we may see are not as extreme as people are forecasting, maybe we go higher. I mean, at some point, I think that Ethereum and Bitcoin are going to go much higher than their all-time high now, but that may take some time. But what I want to show you guys, before we jump off this video here, is some of the things going on in DeFi. Because we started off DeFiancy as a DeFi company, and we started the trading firm, because we knew that you weren't going to make any money in DeFi during the bear market. But now we know that we're coming out of the bear market, and this is really, where a lot of the money is going to be made, is taking advantage of these different DeFi protocols, the yield, and just the different kinds of opportunities that are in the crypto or in the DeFi space in general. So as you can see right now, I mean, this is the total value locked, which is about 50 billion in crypto. The all-time high of the total value locked was closer to like 200 billion. This is the beginning. You're at the beginning of DeFi. I mean, this is going to be seen as the beginning. This is going to be in the trillions of dollars within a few years. And within a few decades, I mean, it could be orders of magnitude higher than it is now. I mean, you have $400 trillion, actually closer to a quadrillion, depending on what source you use, in derivatives contracts alone in the world. Okay, so if you just got a fraction of that, a quadrillion is $1,000 billion. This market goes up a lot. If you just get a fraction of that, and I think we will, because a lot of these applications here, Lido, which is a liquid staking protocol where you can stake your ETH and borrow against it. MakerDAO, which is basically like a decentralized bank where you can collateralize assets and take out collateral, or collateralize assets and take out a stablecoin DAI against it. You have Aave, which is a borrowing and lending platform. You can supply assets, borrow against them. Curve, which is like a forex market, which is a foreign exchange between like assets, like stable coins. And the list goes on. Uniswap's a big one. And a lot of people ask me, well, that's great. You have all these cool little projects, and some of them will probably be pretty influential and have real revenues and become a great opportunity as an asset. But like, which ones, right? People ask me that. And I want people to realize that at the end of the day, the only thing that matters in my mind, or what I should say, the bottom line is how much capital is going through these protocols, right? And this is probably the greatest way to look at this. This is like maybe the best value investors tool right here is the crypto fees. Who is getting the fees? So Ethereum is averaging over $4 million, or around $4 million a day. Okay. Uniswap's averaging over $1 million a day. GMX, okay, Aave, Optimism. There's money going, like that's how much revenue the network is actually generating, okay? As this scales, this will become much higher. But really what I think people should be thinking about is what happens in the future when token holders decide to distribute some of that capital in a form of a dividend. Now, that's not going to happen now because you have security violations that could be, that could happen. But in the future, when things are regulated, you can easily see where this could go, where GMX holders get a portion of that revenue, or, could be, rewarded in some capacity. Okay, because at the end of the day, the protocols are decentralized. So it's not like it's controlled by one group of people. It is controlled by a group of people, but a decentralized group of people. And you could see how in the future, token holders of Uniswap can take some of that revenue and supply it back in the form of a dividend. I'm not saying that's going to happen. I can just see how that could be the future. I mean, that's what happens with stocks, right? Some stocks. But that's pretty much all I want to cover today. I just wanted to really create a video kind of giving you guys our outlook going forward. And we plan on making a lot more videos in the future because we were writing up content and stuff, and I realized, man, I can just get the point across and talk about this stuff way easier, way more efficiently, I should say, making videos. So I hope you enjoy this, and we look forward to making some more of these, guys. Enjoy your week.